Hello. Yes, good afternoon, everyone. And this is Ben Nasra from Matrix. This week has been very volatile for a lot of people who are dealing in the currency market, and the rules are changing very fast in Indian market. And even when I said these things about to my foreign colleagues, they are just skeptical about this kind of moves by the central bank. The first case is, as I noted in the article, without speculative capital, without speculative movements in the exchange of USD INR, people in the corporates and the hedging community, the importers and exporters cannot able to do anything, you know, because the liquidity gets dried up. The spreads of bid and ask, in which people will buy and sell, will definitely go down, which gets the buy and sell values to go higher. For example, 83.4 someone bids, and the ask value is 83.8. So it causes a lot of depreciation in the currency, because fantastically, one financial markets expert said in the today's business line article that most of the corporations are hedging for long dollar. So we know that software companies usually get a lot of revenues from overseas. They like to have higher dollar and lower rupee, which is long dollar, long USD INR. So this is the case. What happens is that it causes a very stringent depreciation of the local currency. Why? Because when you are curtailing the speculative movements, so what happens is there is only banks and brokers who are the market makers in the case, and also only corporations and the importers and exporters side. So there are two sides, banks and brokers, which are market makers, which facilitate the transactions even in the banks, OTC, over the counter market, the banks, and also in the exchanges. And the second thing, the corporations and importers and exporters in the second side usually get quite very differently from what we are experiencing right now. So this is a very, very immoral and very dangerous thing to happen in any country. If you look at the Egypt, which I have noted in an article today, Egypt is also having the same kind of problem, but it is a very difficult nation. It has a lot of problem. It has balance of payment crisis. It has very low exports, a lot of imports. It's a kind of dictatorship. So India is a very vibrant economy, and it has a lot of opportunities for growth. It can attract a lot of capital from externally. Today also we can able to see that the authorities are expecting $100 billion of capital from outside to the Indian market, especially in the foreign direct investment, not in the financial markets. So these are the best things to happen in the market. But if you make your currency very stable for a very long period of time, people will definitely think about that it is a manipulation. This also cause heavy movements in the currency pair, because the trading will not happen. So this is an onshore market after all, which has been building for the last 14 years time frame. So the last 14 years time frame, and we cannot able to do that. We cannot able to sustain it for uh, for more years to come. So they are just curtailing this speculative part of the capital with just an ink of pen, So this is what happening in Indian market. So this is not a best thing to be happening right now. And what I'm saying is that um, it, this market is having a $5 billion of turnover per day. You're having a $5 billion USD of turnover per day, and you are just curtailing this market with just a pen statement from the exchanges and from the central bank. The central bank in saying is that they are following the rules that they have set forth in the 2014 exchange traded derivatives market. But what happens is that why the SEBI, the stock exchanges, and the brokers community have not at all explained this stringent law to the market participants. What is the reason for this? So what is the reason for sudden change of mind from the central bank? So this is the major question that we are asking. So this has caused enormous damage to the market participants for the last 1 week, and it created a lot of losses for investors. It created loss of reputation for brokers. It has caused massive panic in the you know with the lot of players from the uh, financial market side, as I have said. So the conclusion is, we expect the rupee to depreciate further because this market will go towards the offshore like Dubai, Singapore, and people will definitely speculate on the currencies from the offshore market, in which the RBA or the central bank or the any authorities cannot able to do anything about it. So it's important for the central bank to have this onshore market to be operated. Otherwise, it will, when the external capital dries up with the rising interest rates regime that we have experienced the 2022, what happens is that you cannot intervene in the market. You have to wage a very big battle with a lot of speculators with the biggest ammunition, like hedge funds and also investors. So this is my way of thought that I'm doing with. Yes, we will update a lot of things. Yes, about this, and I have already said that we have put a lot of brokers overseas, and this is a good thing right now for us. And many proprietary traders and investment banks are going to set up shops overseas. So this is also going to be a good thing for them. But this event is not going to be a very